Good afternoon and welcome to the Sustainable Materials Management webinar series, a joint effort between the National Recycling Coalition and the Pennsylvania Recycling Market Center. My name is Wayne Bowen. I'm the program manager for the Recycling Market Center and will serve as your moderator today. We would like to extend a special thanks to Bob Hollis of the Mobius Network for providing the webinar management software for this series, and Lisa Ruggiero and Savannah Batowski of the National Recycling Coalition for assisting the RMC with webinar promotion and technical support. Today's webinar will focus on the Closed Loop Fund. Our presenter today is Bridget Croke, who I'll introduce in a moment. Following the presentation, we will conduct a question and answer session. If you have a question or comment, please use the GoToWebinar dialog box located in the control panel on your screen. You may also use the dialog box to request assistance if you're experiencing technical difficulties during the webinar. Please note that an edited version of the webinar will be made available for viewing via YouTube links on the National Recycling Coalition and PA Recycling Market Center websites. A copy of the PowerPoint presentation in PDF format is also provided as a handout, and you can obtain that handout by going on the handout section on your control panel. And now I'd like to introduce our presenter. Bridget Croke leads the external affairs, including investor partnerships, industry partnerships, communications, and special projects at the Closed Loop Fund. Bridget has spent 15 years designing and building campaigns, often in partnerships with brands and companies, to motivate consumers to lead a more sustainable lifestyle. Prior to Closed Loop Fund, she held leadership roles with My Actions behavior change platform, social movement consultancy, and incubatorpurpose.com, Recycling Awards, program, recyclebank.com, and Fair Food Project. Okay, here's Bridget, and I'm going to turn the presentation over to her.
Great, thank you. Thanks everybody for joining. I want to give a little bit of background on Closed Loop Fund, which many of you may have heard of or know about, but I'll give a quick overview of who Closed Loop Fund is, our priorities and our criteria for investing in projects, some of the impact we've had, and then some of our priorities moving forward in terms of the types of investments that we're looking to make over the next few years. So the Closed Loop Fund is about 3 years old, and we have pooled capital from about 10 consumer product companies and retailers to invest in recycling infrastructure across the United States. We anticipate distributing about $100 million over the life of our fund. And again, we're about 3 years into our investment period, and I'll go through some of the how much impact in the investments that we've made to date. And we're investing zero interest and below market rate loans to try to spur investment in recycling and try to improve and increase investment in recycling business models that make sense. So a little bit of background on how we invest. Again, we're a loan fund, so our goal is to prove that there are municipal and business models that have a payback, but we want to create affordable capital so that we can catalyze projects that we think are going to spur recycling in the coming years. And we want to be able to increase access to recycling as much as possible in as fast of a way as possible. So we feel like it's important to have a payback on these loans, but also to make sure that we are taking the risk so that these projects can move along much faster than they otherwise would have. We also, in the investment space, we're trying to bring other investors into this space. And so most of them don't have sector expertise and know how to due diligence these kinds of projects. So oftentimes we're the ones who are kind of taking the leadership on bringing these projects to the table and bringing other investment in. So we invest across three primary parts of the system, and we really invest across the whole system, but we've broken that into three categories. The first is collection, and that includes single stream, and that's primarily residential. It includes single stream carts in communities across the U.S. We've invested in Scott County, Iowa, recycling carts. We've invested in Ohio, Memphis, Tennessee, and we're about to be launching Waterbury, Connecticut. So we've done a number of communities where we've invested in single stream carts to increase access. We're beginning to invest in multifamily residential collection. It's an area that we're looking to invest a lot more in. It's a real challenge area for many communities, and particularly in urban areas that may have good recycling rates generally. Their recycling rates are often brought down by their multifamily households, which are trickier from a collection standpoint. So we're looking to invest in that kind of project. And then we also invest in recycling trucks, which is part of the collection system and is often a challenge. The second area that we invest in is sortation. We invest in new MRF builds, so in areas that we consider recycling deserts that don't have the infrastructure necessary to sort the material at all. And so carts wouldn't be particularly helpful if there is no sortation facility. We invest in new MRF builds. An example of that is in Pensacola, Florida. We're an investor in the Emerald County Utility Authority MRF that was recently built and is a new MRF in the area, and we'll be able to sort materials from the whole region around that. We do MRF upgrades. Oftentimes that's equipment upgrades. It might be whole system upgrades, usually involve some combination of things. And then we invest in kind of expanding what the MRF accepts today. So we're looking to invest in technology and operations that will help new materials go through the system in an economically viable way. So that includes trickier plastics. It includes some mixed plastics that may not have otherwise been taken. It also includes things that have been accepted, like glass, but ensuring that it's going to be done in a way that's more economically viable for the system. So, and then we're also looking for solutions to help reduce contamination. And in some cases, that includes new technology like robotic systems that are more emerging and can help better identify the materials and help understand kind of what's going through the stream. And then we also invest in secondary processing and market development. It's our strong thesis that, collection and sortation definitely need infrastructure upgrades, but unless there's value at the end of the chain, even if we give a loan to MRFs or communities, it's not necessarily they're not gonna be motivated to accept more material types unless there's actual value in that material at the end of the day. So we're looking for better, more efficient ways, cost-effective ways to process materials. We're looking for ways to better process some of the more difficult to recycle material types, and like some of the mixed plastics, if there are more cost-effective ways to turn that into a pellet, or we can create higher quality materials that have less smell or more consistent color to be able to go into the manufacturing stream. We'll invest in those kinds of projects. And then we invest in market development that will help diversify and increase the value of things like glass and plastics, and in some cases, paper as well. There are materials that don't require a lot of that and already have high value markets, but many don't, and we want to make sure that we're crossing over that. And then from a criteria standpoint, we're looking for projects. The first thing that's most important to us is we're not looking for projects that are a one-off and can't be replicated and scaled. So we're really looking for projects that have strong scalability and can help the whole system. So in terms of collection, that often means communities that have similar archetype communities elsewhere that we can kind of replicate and prove that it works and they save money and make money, and ultimately it's a value to the community. If we can prove that in other communities, we're very interested. In terms of sortation, very similar. If we can prove kind of successful business models at the MRF, that's something that's of high value to the system and therefore us. And then in terms of manufacturing and market development, oftentimes it's a private company. So if that business has some opportunity to scale, then or similar models can be created elsewhere. That's very interesting. We're also looking to increase tonnage in general, which may be fairly obvious, out of the landfill and into the recycling stream, especially of high value materials, but we also want to increase the value of lower value materials. We need to have some payback. The terms of the loans are typically we typically do between $1 to $5 million loans. Oftentimes we can help bring in additional financing from co-investors into the project. And for the right project, we would consider a smaller loan if it was something that, was high value in terms of our mission. But we need to see that they're at whatever terms we create, which is typically below market, are always below market. But the rate varies depending on the project. But that there does need to be a clear payback, and our average terms are somewhere between a 3 to 7 year payback, and can go up to 10 years and occasionally longer. And then finally, there needs to be a clear path to reporting. We need to be able to see clear reporting that helps us, prove the payback, but also show the impact that's being made. And so this is what we do. This is where our focus. And so again, we're primarily loans. And so we do work with others in the industry that have other, that do kind of adjacent and complementary things. So I just want to spend one slide talking about one of our key partners, the Recycling Partnership. They do a combination of grants for collection infrastructure. They have a set of tools and training for municipalities to help them better with their operations and communications, and are creating some really interesting insights across the industry. So in so much as there are needs in communities, oftentimes we'll pull them and others in as well. But if there's a need for a grant or something different, they're also another important resource. Just to give you a sense of where we've been so far and what we've been doing for the last few years, this is a map that shows the projects that we've invested in. And this is from our 2016 impact report. So we've actually launched a few additional projects since then. But this gives you a sense just geographically of where we've invested in collection, sortation, and processing. I'll kind of dig into some of these a little bit and give you some specific examples. We've invested in a MRF and collection company in Minneapolis, St. Paul, Eureka Recycling. We've invested in a MRF and a municipality in Iowa. We've invested in Momentum Glass Recycling that processes glass and tries to increase the value of glass in Colorado. We've got carts in Memphis, Tennessee. Portage County, Ohio is another cart and trucks project that we've invested in. QRS is a PRF, a plastic recovery facility in Baltimore, Maryland, that's increasing the value and creating domestic markets for mixed 3 through 7 plastics, with polypropylene being kind of the area of the most value at the moment. And then we've invested in collection in Waterbury, Connecticut. And then there's a few more that have been added, like ECUA, the MRF I mentioned in Florida. And over the next few months, we'll be announcing a number of additional investments that are further down the chain on the end market side. And so you can expect some more announcements there forthcoming. But to date, we've seen about 150, and actually this has probably grown to more like 175 at this point, requests for funding. And this goes again across the whole spectrum of collection, sortation, and processing and in-market development. We're seeing that there is a strong demand for what we put out there. And when we got started, we really focused on seeing what the market brought to us and what folks were looking for in order to improve their own recycling operations. And since then, we've begun to better or more discreetly identify what we think some of the key bottlenecks in the system are. And we've started to go out with more specific requests for proposals around key material types, key geographies, and types of projects that we feel like we're not seeing coming into our pipeline. Just to encourage, just to ensure that folks who need funding understand where there might be really specific opportunity that we're looking for. So far, we've funded 11 projects. And again, as I said, we have more coming shortly. We've diverted about 110,000 tons from the landfill, and that's diversion to date. So from the projects that we've funded and are rolling at this point, that's what's been diverted. So it's not a future number, it's an existing number. And that's had the equivalent or the corresponding 232 metric tons of greenhouse gas avoided. We've had about $560,000 in direct economic benefit to municipalities, and we've reached almost 2 million households in the projects that we've invested in so far. And I wanted to share just some of our insights from the last few years of investing. And then I'll speak a little bit more to some of the specific priorities moving forward. So the first one is, when we've heard a lot in the last few years about the value of recycling and some of the challenges with recycling, particularly with markets shifting and oil prices being challenged over the last few years. But one of the things that we have found that there absolutely is economic value to be had in recycling, and it can make business sense. And what we've really been focusing on is looking for the business models and the municipal models that help prove that out. So Lakeshore Recycling in Chicago, which is one of our investments that I don't believe I've mentioned so far, we invested in them a little over a year ago. And so we've seen some early results. And actually, if you go to our website, closedlooppartners.com, you'll see a case study of Lakeshore that gets into some of the specifics around the business model and the economic impact that's been made, and the environmental impact as well. But they're a really great example of a private recycling company who came to us because they wanted to build a new MRF in the Chicagoland area. And what we loved about their business model and what makes sense and why this makes financial sense for them is they have kind of two key elements that we really liked. One is that it was vertically integrated. So they are a hauler and they collect waste from households in the suburban Chicagoland area. And then they also have contracts with the city and elsewhere and their own MRFs. So material is coming to their MRFs and they're making money on those commodities. And so they're also, with the households that they collect waste and recycling from, they don't own a landfill, so they have to spend money when they send that material to the landfill, but they make money on the commodities. So as a business, they're highly incentivized to ensure that their consumers and customers are recycling as much as possible so that they are more profitable as a business, so that they're not spending money on sending stuff to a landfill that they don't own. So that was one kind of really high value element to their business. The other is that they have a diversified feedstocks, which ultimately diversifies the finances of the company. They have, in the same MRF, they have a C&D, construction and demolition, and residential MRF that they're sharing, which has all kinds of benefits and economies of scale, but it also diversifies their revenue, which helps make them solvent and growing. And since we've invested in them last year, they've become the largest privately owned recycling company in Illinois. So they've only been growing. The second key insight that we've seen is we've gone to communities and tried to invest in projects around the country, is that the public leadership and commitment is really critical to make these projects successful. We've had a lot of conversations with communities where we've had opportunity and some things made sense, but without that public leadership, it's been hard to move some projects forward. So Memphis is a really great example of that. They've had an administration change over the last year, and we've been having conversations in Memphis for a long time. And while there was a lot of interest, we wanted to make sure that it was going to be successful and that it was going to be a program that was not an opt-in program, that everybody had access to this recycling program. So you couldn't say, it works in this community, but not in that community, or this region of the city, but not in that region of the city, and that it was, equal opportunity for all residents, no matter what their kind of economic standing was. So when the new mayor came in last year, not only did we expedite the process of investing in them, they decided to, from leveraging our money completely, they decided to co-invest a significant portion, which gave them, greater skin in the game and therefore more opportunity to be successful. Recycling Partnership also came in as a partner and invested in communications and helping with their operations. And we've been able to, make a much more significant impact and investment in that community, and we've seen results so far. The third piece, and I've mentioned this a bit just from our investment strategy, is that without the acceleration of this market development and innovation piece, we could build collection and sortation infrastructure all day long, and it wouldn't help anything. As I mentioned, QRS is one of our investments. It's a plastic recovery facility in the Baltimore area. And, one of the key bottlenecks that we found in the system was that 3 through 7 plastics, there were mixed bales at MRFs, and the MRFs weren't large enough and they weren't getting enough volume to make it economically viable for them to sort out the high value commodities from that bale. And so when we would go visit MRFs that we were investing in, or in communities that we were investing in, we'd see these 3 through 7 bales that had been sitting there for a very long time with no market. And so QRS, their model, which and this is, you know, the PRFs have been around for a little while, and this is the largest one in the US so far, and we're seeing the opportunity to kind of expand these. They are large enough, they can aggregate material and buy mixed bales from MRFs within a 500-mile radius of their facility. So it makes sense for them, because they have the scale to be able to then go and sort those out for the high value materials, and then sell those to, and actually they flake some of that material themselves and then sell it off. So they're really increasing the feedstock of particularly polypropylene, but they're also starting to experiment with some of the other materials in the 3 through 7 bale that could ultimately have value if we sorted them out at scale and go back into the supply chain. So it drives further innovation to some difficult to recycle material types, but also significantly increases the supply of polypropylene going back into the manufacturing chain. And you know, we know from our investors, who are some of the largest consumer product companies in the world, that they want that material, but they can't accept it unless it has consistency and unless there's a supply, you know, that they can rely on over time. So this kind of model and other models to be able to access these materials is really critical to the system. The next key insight is that it requires, in order for recycling to be successful, it's a whole value chain. It's not just what happens at the end of the life of the product. So, you know, the innovation in some of the models that are working on recycling today, and we're working on the system, like us, like the Sustainable Packaging Coalition and Recycling Partnership and others, is that we're bringing together folks from across the value chain to be able to work together to both understand what the needs are, but also actually invest in this space. And we're finding this is our investors, you know, who came together to pool significant capital and invest in the recycling system, because they knew that if they didn't invest in making recycling more effective, that it was going to both be problematic from the standpoint that their materials weren't going to be recyclable, which is a real problem from a consumer engagement standpoint, and creates a kind of a break in the system of giving the consumer a positive experience. But also, you know, long term, there's going to be more and more volatility in the raw material market, and so they're going to want access to these materials, and so they need to help increase the supply of the material in a way that they can use it so that they have consistent access over time to this manufacturing chain. So that's kind of been a key insight, that without engaging that group, and also in their design to make sure that their material can get through the recycling stream, there's going to be breaks in the system. And then the final kind of major insight that we found, you know, $100 million is a lot of money, and we're unlocking about, you know, so far we've invested a little over $20 million of our own capital, now 2.5 years in, and we've unlocked about $70 million total in co-investments. So, or the total is in 70 million. So our 20 plus an additional 50 from other investors. So, you know, that is significant. That's, and we, you know, we see on average about a 3-to-1 co-investment ratio in our projects. So our money is catalytic, and that it's bringing in additional investment into the system. But that's not enough. And so our key thesis moving forward is that, and you know, from the get-go, is that we want to unlock additional capital in this space. And so we are not only very focused on ensuring that all of the projects that we invest in have co-investors, like institutional bank investors, impact investors, municipalities, states, et cetera, to ensure that they're testing out, you know, that they're seeing that they can invest in these things and see a payback. But we're also looking to kind of understand what the size of the need is out there, and we know it's larger than what we have today, and understand kind of who the other investors out there, and start building a movement of investors to understand this space and be able to more comfortably invest in this space with our support from a due diligence standpoint, and us bringing kind of a lower risk profile to the entire project. And just as an example, of seeing this start to grow, we have major co-investors in our projects like Bank of America, Comerica. We have impact investment partners like Calvert Foundation and RSF Social Investments, who've come in and said that they kind of need that domain expertise to help them understand what the investment opportunity is here. So that's really how we want to use our capital to become more catalytic and move this space forward. And we, just prior to this call, we got off the phone with Bloomberg, who was trying to understand and do an article on investing in waste, which is something that they feel like is underinvested in today, and we agree with them. So we're starting to see a lot more attention around this, and we're really excited about that prospect. So moving forward, we're going to continue to invest across all the areas that I spoke to earlier, but I wanted to highlight one of the key areas that we're trying to invest in moving today. And we recently announced an RFP to try to solicit more projects in polypropylene recycling. And this was really inspired by both us seeing that there is a high value material that we're not getting enough of in the market. It has a lot of opportunity to add value across the whole system, but it's also inspired by a few of our investors. Croke, Green Mountain is one that is working really hard to increase the type, they're getting their material recycled and they're going to full polypropylene. So it's important to them. Unilever, Procter & Gamble, Colgate, Johnson & Johnson, and others in the closed loop fund also play strongly in polypropylene. So we've taken kind of a specific look at this. We also have some projects like QRS where polypropylene is kind of the key value point. So we're looking to increase the recycling of polypropylene. Just as an example, there are other material types as well, but just a couple of examples of the types of things that we're looking to fund, and we're actively soliciting proposals here. So, I encourage everyone to go to closedlooppartners.com and look at the apply page to understand how to apply for this and or general projects. But we're looking for projects that increase the collection. We're looking for projects that, like MRFs, that are servicing large municipalities and are looking for kind of new technology in the MRF to be able to sort and bale this material. And it can be combined with other materials as well. So if this is one part of a proposal, which these usually are, we encourage kind of broader proposals as well. We're looking for other kind of MRF exportation projects. And then we're also looking for processing projects that have the ability to increase the quality of the pellets that are out there so that they can better be used. So again, we encourage everyone to look at the application process for this and for projects in general. For this project in particular, like I said before, this is a bit of a broader range than some of our other projects. So we'll go a little bit lower into the $500,000 range up to $5 million. And again, we can arrange funding for bigger projects. So there's our information, so you know how to apply and can check that out. Also, you're welcome to reach out to me. That's my email, both on this topic, but also if you have a project that or someone that is looking to get an investment and want to talk to us before you propose something or before they propose something, just to get an idea of if it fits in our scope and our priority set. We encourage folks to reach out. And then here's just a little bit more information on the application process. And there's quite a bit of detail on this on our website, and the applications live there. And then the companies below are the companies that are part of the fund, who've invested in the fund, that are making these loans possible. So I'll stop there and open it up to questions.
All right, thank you, Bridget, for that great presentation. A good update on the closed loop fund. And so we're now going to field some questions for our presenter. Again, if you have a question, please enter them on the GoToWebinar dialog box. We do have a couple already. Let me go to him here. This question basically asks if CLF takes any position on like a ban versus recycling of a certain item, such as a plastic bag or EPS or even glass.
Yeah, it's a good question. So I would say that we do not take any public positions on this stuff, and we also have to be, just as an organization, we can't lobby. We have to stay away from kind of that kind of issue. We do take an investment approach based on what we think should happen to material. So, you know, we will focus on material. Well, we wouldn't encourage a ban or encourage some sort of kind of recycling choice versus a ban. We would say, okay, we think there's an opportunity to increase the value of this material type, so we'll invest in end market development of that. So glass is a really great example of this. We know that glass has been a real challenge, obviously, for the whole industry. And part of the problem is that it's low value at the end of the day. So it doesn't make sense for MRFs to invest in the cleaning equipment necessary to get it to the specifications required to get it back into bottles, for example, in some markets. That's not always true. So in the markets where that's challenged, and we actually will be releasing an RFP hopefully later this year on glass cleaning equipment, and we're actually about to release a study that shows when that makes sense and what the market investment need is. But instead of saying we think glass should go out of the system, we have we've looked at what the end market opportunities are out there, and we're very likely to be investing and announcing a couple of projects that will be kind of higher value market opportunities for glass and make it make more financial sense to actually be in the system and require less cleaning at the MRF and make it, you know, less problematic. So that's how we approach improving some of these material types. There are material types that we've just, you know, like we haven't played in EPS at all. We've stayed away from that. There hasn't been enough opportunity coming our way. But with all material types, if someone comes to us and says, you know, we think we know how to make this material make sense in the recycling stream and we need an investment around that, we're always open. We take an innovation approach, and so we're always open to innovation and opportunities to invest in that. And so we just don't play on the ban side, though, in either direction, saying yes or no.
Okay, speaking of glass, this next question, you pretty much touched on the answer, but it asks, any chance CLF can support efforts to more effectively separate glass and paper so that both can be made into higher grade end products?
Yes. Yeah, we'd encourage folks to come to us with those kinds of proposals for sure. And we will be releasing a study, hopefully in the next 3 to 4 months, that shows some of the kind of technical recommendations. We won't be recommending specific equipment or brands, but we will definitely get some kind of our learnings from the work that we've done to understand what would cost effectively get glass to the specification necessary for some of the bottling and the processors and bottlers. And we have invested in some Momentum is a glass processing facility that is increasing value of glass. And so we're definitely invested in glass. And if there are sortation opportunities that the MRF thinks that there is a payback on that because they have it in market nearby, we'd be very interested in seeing those projects.
And obviously the closed loop fund focuses on the curbside materials. Do they look at other materials? And here's one that mentions recycling shellfish from the seafood industry. And other examples would include source separated organics and perhaps construction demolition waste and even ag plastics. Those are kind of not your traditional materials. Has the fund looked at those at all or considered it?
Yeah, it's a great question. So we, because of who our investors are and just where we sit in the system, we're primarily focused on residential packaging waste that is kind of makes sense to go through the MRF. That said, if there was a comprehensive project in a community where the case could be made that including some organic separation and or C&D waste. So for instance, Lakeshore, we invested in their MRF that has both a C&D and residential element because we thought the business model made sense. So if there's a case to be made that residential recycling system will be improved, either contamination will be reduced, or this solves kind of this is a comprehensive program that needs to include all of these things, including residential recycling, C&D, some sort of organics, we'd be open to those types of projects through the closed loop fund. While we support all of the things that you just mentioned, it's out of scope for us to focus primarily on organics or material types like electronics or textiles or things like that don't fit into the MERS system. That said, one of the things that I didn't mention in this discussion is that we've launched a couple of additional initiatives outside of the closed loop fund. And you can find them on the website that's on this page here, closedlooppartners.com. We've broadened our platform to closed loop partners because we have a few funds underneath that include the closed loop fund, but we also have launched an early stage venture fund called Closed Loop Ventures that's investing equity funding in early stage innovation and to help commercialize a broader set of disruptive solutions in the circular economy space. So we have an investment in textiles and organics that are, again, earlier stage companies. But so I'd encourage that kind of company that has a broader scope to look there, and that's on our website. And then we also have a foundation where we've been doing some research and development and some grant funding around more difficult to recycle material types. And it's kind of it's not an ongoing project, but it's something that we've done. We've had a few each year, and we'll continue to grow in the future. We did a solution search for early stage innovators that are solving issues around food waste and around post-consumer film and flexible packaging. And so, it was a kind of time-bound solution search where we gave somewhere between $50,000 to $150,000 grants to early stage pre-commercial projects that are going to help solve some of those challenges. And so you can keep an eye out, or if you go to our website, you can sign up for our mailing list where you can learn more about those as they come along.
You answered about 10 questions there, Bridget, so very good. Let's see here. Talking about the financing. Does this closed loop do any refinancing of existing debt for a project?
Typically not. No, we need to have some sort of asset it's a debt fund that is focused on infrastructure. So there has to be an infrastructure play, and so there hasn't been a refinancing project that has made sense for us. I wouldn't say we're completely closed off, but it's less likely.
Okay. Application question. If there's a project already in the RFP phase, is that too late to apply for CLF funds?
No, please. No, not at all. Definitely bring it to us. And we would be happy to consider things in that phase.
Okay,
especially, I mean, the big thing just to add to that, like there does need to be some sort of challenge in terms of making the project work without us. We want to make sure that we're helping projects move forward that would otherwise either not move forward, and so that in that sense that wouldn't make sense. But if there's a case to be made that we will make our financing will make the business much more effective because of the cost of capital, and knowing that some markets are challenged right now, we can make a case that we are adding value or adding knowledge value as well. So we'll absolutely consider those, but we still need to make some case that we're adding a unique value that would make it more challenging without us.
A question on the polypropylene recycling. Would you consider funds using existing technology, or is the technology at a point where we're talking about some R&D in the field? Does the closed loop fund look at stuff like that?
Yeah, so we would go in either direction. We have some opinions on some of the technology that exists today, some of the screens and stuff that we think can better capture a broader array of this material. But we would definitely consider technology that is pre-existing, and we're happy to talk through some of our thoughts on that. And then we'd also are looking for projects that are wanting to test some emerging technology like robotics and better identification eyes and whatnot.
Okay. Here's someone from Waterbury who's received some of your funding. They want you to make sure you mention your direct technical and outreach assistance that you provide as part of your support.
Yeah, no, thank you, whoever is on the line from
CJ.
Waterbury. All right, CJ, thanks, good cue. So we've gotten this question before where, how we actually work with our projects, and particularly, I mean, we work really closely with all of our investments to ensure their success, whether that's on the municipal side, where we help them just from a technical standpoint and kind of make sure we work side by side with them as they're going through the process of, choosing their partners and building facilities and contracting and whatnot. So we definitely provide a lot of technical assistance, and we have some amazing folks on our team who lead that and have been in the industry for a very long time. And then we also work with them to try to ensure that they're using best practices from a communication standpoint. And then on the municipal and private side, we're also, part of the benefit of us working across the whole system is it gives us a real kind of visibility and a set of relationships to help make these projects more successful. So if we have opportunities to connect them with an end market or connect them with our investors who could act as an end market or partner with them in some way, we try to make them as successful as possible through our network and through our expertise.
Okay, how would nonprofits engage with you to fund a project focused on reuse and diversion?
That's a good question. I think it would be, that's a broad question, so I'm not exactly sure how to answer it, except for I would say that we have invested in nonprofits. So Eureka Recycling in Minnesota, it's a collection and sortation recycling company, zero waste company, and they have a whole range of different things that they do beyond those two things to drive drive zero waste. And we had made an investment in them. In terms of, we aren't a granting organization, and we likely would not fund a small project or a project specifically around reuse if it didn't have a recycling component. But I guess I'd have to know more about the project to understand, what it is and see if there's some way to work together or work in scope. And we can also make recommendations to others who work in the space who might be more appropriate if we're not the right fit.
Would you be open to help a curb sort program become more cost effective?
Say that again?
Sorting at the curb, a program that sorts at the curb. Would you fund something like that?
If it's the right program, we would be open to it if it makes financial sense and increases tonnage and is replicable, definitely.
Okay. This question, I think you've addressed part of it early on in the presentation. Does CLF have any data regarding single stream benefits / impacts? It's kind of an open question.
We do, and we'd be happy to share some of our research on that. Many of our partners who I mentioned early on also have some of that research. So if folks reached out to me, I'd be happy to share some. We're not, there are instances where dual stream might make sense, and we're open to those as well. We haven't come across those, ones that have come to us for funding or that made sense for us to date. But in some cases, we're not myopically focused on single stream, but we do think that's the direction things are going, and it increases tonnage, and we're trying to invest in, that's where a lot of our investment dollars have gone, and to make sure that happens with as low contamination as possible.
Okay, I think we're through all the questions, so we're gonna close up the webinar at this point. So again, this webinar, like all the webinars in this series, has been recorded, will be made available via YouTube links on both the National Recycling Coalition and Recycling Market Center websites. Thanks again for joining us. We hope you'll join us for next month's webinar, and please visit the NRC and RMC websites for schedule updates. And again, thank you, Bridget, for making the presentation and opening up your ideas and your project for all of us. So long, everybody, and have a great day.